A point of interest is simply a level or a zone where you'll be interested in taking a reaction if price eventually get there. Now, before we go into talking about how to identify a high probability point of interest, you need to understand the various types of point of interest. There are basically about 3 types of point of interest. We have the point of interest caused by a break of market structure. We have the point of interest caused by a change of character. And we have the point of interest caused by a failed order block. Now, the aim of this video is to explain to you this type of point of interest, and most importantly, show you how to identify a high probability point of interest. My name is Divine and I'll be right back. Now, for you to know how to identify a point of interest or a high probability point of interest, you need to understand these 3 types of point of interest, and I'm going to explain them one after the other. The first one is referred to as a point of interest caused by a break of market structure. Market structure is what shows direction of the market, and a break of market structure is what shows the continuation of that direction. When price shows a break of market structure, price shows a point of interest. That means for every point of interest, there's a break of market structure, and for every break of market structure, there's a point of interest. Now, the next one I want to talk about is the point of interest caused by a change of character. A change of character is what shows that the trend is about to change. It acts as a reversal pattern for the market. Let's, for instance, say the market is in an uptrend. If the market is tired of going to the uptrend and wants to go to the downtrend, it shows a change of character. And when price shows a change of character, price as well shows a point of interest. We're going to see that in the chart as well too. Now, the third one is referred to as the point of interest caused by a failed order block. The point of interest caused by a failed order block is often referred to as a flip zone, and as well it acts as a reversal pattern. An order block is simply a refined supply and demand zone, and is a place where traders will likely want to go into a position from. Now, let's for instance say there is a buy order block here, and that order block fails to hold. When that order block fails to hold, that same order block acts as a point of interest for a sell position. We're going to see that in the chart, but before going to the chart, let's try and understand what liquidity sweep is and as well liquidity grab, because liquidity sweep and liquidity grab play a very big role in identifying a high probability point of interest. Now, a liquidity sweep is simply a fake move that quickly takes out people's stop loss on the market, whereas a liquidity grab is simply a real move that hunts people's stop loss in the market. Let's go to the chart so I will show you all these things and it's going to make sense to you. I'll see you in the chat. Now, for you to be able to identify a high probability point of interest, you need to understand the direction of the market. And for you to be able to understand the direction of the market, you need to use market structure or understand market structure. Now, what I'm going to do now is I'm going to use market structure to identify the direction of the market. Now, I'm going to clear all these charts. I'm going to clear these charts. Now, for you to be able to identify market structure, I like to use the 4 hours time frame. Now, what I do now is I go to the 4 hours time frame here. Now, in the 4 hours time frame, I tend to use my trend line to identify direction, or say the trend of the market. Now, if you can look closely here, you'll see that from here, market was in a downtrend. Market was in a downtrend here, and all you can see is series of highs and lows. And if you look closely here, the last swing high for this trend here was here. And the low that gave us that swing high was this low here. And the last low for that trend is here. Now, because this this move gave us a break of market structure to the upside. It becomes our change of character. So instead of here to be a break of market structure, it becomes a change of character. Let me change this place that change of character to another color. Now what you can see is that this brown line here is now our change of character, and this swing low here that gave us this change of character becomes our point of interest. So we are interested in this place now becomes our point of interest. Now this place now becomes point of interest caused by a change of character. So we are going to be interested in what price is going to do when price eventually comes here. I remember I took a sell from this position here down to this place. I'm going to explain to you why I took that sell. Now we have identified that the market just created a change of character to the upside. This is the change of character, and this is the move that gave us that change of character. Now, if you have to study this trend together now, we'll observe that at this trend, price kept on respecting every other block on this trend because they have seen that there's a change of character and price is now bullish. So everybody on this trend now was actually buying or using other block to buy. Let me switch to 1 hour time frame so we'll study it together and see what I'm saying. Now, if you look closely on this trend now, you see that price was creating an internal change of character, and that occurred when price took out this high here and gave us this other block. You see, they allowed price to come back to this zone, and then the bot came back, but so price was respecting the series of other block here. Now, what made me to take that sell position? I was able to identify a point of interest caused by a flip zone. Now, if you study very well here, price kept on respecting other blocks here. So, as far as you're on this trend here, once you see an other block, price will respect it. So, when price got to the last other block here, which is here, price failed. That means instead of price to buy from this other block, price sold completely. And when price sold completely, price was creating series of engineering liquidity. Price was creating liquidity here. Price kept on engineering liquidity at this whole zone here. Price was creating upside liquidity and the downside liquidity. Now let me mark out the liquidity zones here. Now this liquidity here, that price needs to sweep first before price can actually buy. This is liquidity here. Now price was creating buy side liquidity. This is liquidity, all these zones here, liquidity. Now if you study all this price action here, you see that price was creating liquidity to the upside and creating liquidity to the downside. And what you can see, that price took out the buy side liquidity and then proceeded to grab the downside liquidity and then finally came into this our point of interest. Remember, this our first point of interest here was point of interest caused by change of character, and here price created or gave us a point of interest caused by a failed order block. So this was where I took my sell position from to this my point of interest. And I'll just explain to you why I took that. Price failed the order block here. So I got a point of interest failed caused by a failed order block, and I took advantage of it. Now I'm going to explain to you where I took from this point of interest here. Now when price got to this point of interest, I was waiting to see if I would see a change of character. Now when I saw a change of character, I was a bit convinced that price was going to go in my favor. Now where is change of character? Remember, every change of character on the smaller time frame is often referred as inner or internal change of character. So what I saw here was this. Price Price gave us a change of character here and then left us a point of interest at this zone here. So this is another internal change of character this is another internal point of interest caused by the change of character. Remember, this bigger one was the external one on the 4 hours time frame, and now this one is on the smaller time frame, which is the 1 hour time frame. So what did I see to take this trade? Now when I noticed that price came into this my higher time frame point of interest, I was expecting to see a change of character, and price showed change of character. When price showed change of character, I took advantage at this zone here, but I was very much aware of the news, so I didn't even hold it to this level here. I only held it and took out this high here. This high here. So I think it was 1 to 2 risk to reward. I don't know. Yes, maybe. This is what I did. So I took advantage of this chart here. I held it to this zone here. I'm going to show you the proof for this chart. I'm going to put this proof somewhere here. So I took advantage of this entry here. Remember, the first one I took was last 2 weeks. Was here, this big move here, and then this one. And I've explained to you that this one now was change of character caused the point of interest caused by change of character, and now this one here was the point of interest caused by a failed order block. And then the third one here is the internal change of character. Sorry, internal point of interest caused by change of character. So when price came to this place, I took a buy. Now the last buy here I took here was as a result of a point of interest caused by a break of market structure. Now knowing that the price is about to change, this place became a swing high, and this place now becomes a swing low. Now when price broke out this when the news caused this break of market structure here, I knew that price was going to come back to this zone before it eventually continues. So here is my break of market structure. And for you to identify point of interest caused by the break of market structure, you need to be able to understand one simple thing: liquidity sweep and liquidity grab. Now after the news, this place became my point of interest, and I'm interested in what is price going to do when price comes to this place. Am I going to buy? What am I going to do when price actually comes to this place? What am I looking out for before price gets to this place? Now, if you go back to this previous one that I took here, you see that I used the concept of liquidity to identify a high probability point of interest. I'm looking to see a liquidity sweep and as well a liquidity grab. Now, if you look closely here on this first example I gave, price engineered buy side liquidity and as well engineered sell side liquidity. I knew that price was going to actually take one of this liquidity first before it continues in direction. And as you can see, price first took out the buy side liquidity and then proceeded to take out the sell side liquidity. Same thing goes to this other side too. Price engineered liquidity here, double top here. Sorry, double bottom. And what you can see was price quickly took it out and then proceeded for a buy side liquidity here. Price first took the sell side liquidity and mark it out. So this is the sell side liquidity here. I'll change it to brown color. And this is the sell side. This is the sell side liquidity. And what you can see here is that price first took out the sell side liquidity and then proceeded to take out the buy side liquidity. Now on this my last chart, this is my last trade that I took. When price wants to reduce my point of interest here, price created a downside liquidity, which is here. This is downside liquidity, and then this is the buy side liquidity. Now what I'm waiting for price to reduce, for price to take out any of this liquidity here. First, if price was going to first take out the buy side liquidity first before it goes to take the downside liquidity. So what I could see was price first of all took out the downside liquidity and then seated very inside my point of interest. Price just got to my point of interest, so I didn't even waste time to take this trade. I just took it and targeted this liquidity here. That was how I got that buy opportunity. I'll put the screenshot of my trade here for you to see as well. So that's how I targeted this liquidity here. And let me be honest with you, this did not happen in a day. It didn't happen in 2 days. Most of these charts I held them for like 2 days or even 3 days. So don't think that I came to the market, saw this opportunity that same day and got it that same day. I had to leave the trade to run. Okay, this one happened in a day. Some happened in a day. But don't think that if you just open the trade today, it's going to happen today. No, it doesn't happen today. I have to be very patient for it to play out. To summarize the whole thing I've explained here, for you to have a very high probability point of interest, you need to see price engineer liquidity below or above the point of interest. The first one we explained, price engineered liquidity above the point of the interest caused by the change of character here. Price engineered liquidity, both buy side liquidity and sell side liquidity. And what I could see was price first of all grab the buy side liquidity and then proceeded to tapping my point of interest caused by the failed order block, and then came back to my point of interest caused by change of character. So once you understand how price engineers liquidity and understand these various type of point of interest, you have to, the way you see trade or the way you analyze the chart is going to actually change your favor. I think this will be the end of this video. If you find this video very helpful or maybe educative, you could subscribe for me and like the video as well too. I'll be off for this video. Do have a beautiful day. Peace.